All right, today we're diving into Waste Management's latest earnings report, and man, did it send some mixed signals to the market. The company missed expectations, but at the same time, they were calling it a record year. So how can both of those things be true? Let's dig in.
So you've got this big headline, right? The company missed expectations, the stock dropped, but then you hear the CEO talking about a record performance. It's a real head-scratcher. This is the puzzle we're here to solve. What is really going on behind the numbers?
Okay, so first, let's just look at the raw numbers that got everyone talking. I mean, on paper, it looks like a pretty clear miss. Wall Street was looking for an earnings per share of $1.95. They came in at $1.93. And revenue, that was a bigger miss. They came up about $78 million short of what everyone was expecting.
And, as you totally expect, the market saw those numbers and reacted instantly. Headlines screamed miss, and the stock fell almost 4% right after the news broke. A classic negative reaction.
But here's the thing. If you only look at those headlines, you're going to miss the real story. And it's a way more interesting one, believe me. We have to look past that initial market freakout and peek under the hood at the company's operations.
So let's do that. Let's get inside the engine room. This is where the company tells its side of the story, where we can see what's actually happening with the core business away from all that headline noise.
Now, to really get what's going on, we got to talk about a specific term. It's called operating EBIT margin. Sounds kind of technical, but all it really is a way to measure how efficient a company is. It tells you how good they are at turning their sales into actual profit from their main day-to-day operations.
And bam, here's the first number that just completely flips the script. In their main business, that efficiency number we just talked about, it jumped by 150 basis points. Now, for those who don't live and breathe this stuff, that's 1.5%. And trust me, in this world, that is a massive leap in profitability. It's a huge sign that the core engine is just humming along beautifully.
And all that efficiency, well, it turns right into cold, hard cash. Their free cash flow, the actual money they have left over after paying for everything, it grew by almost 27% for the year. We're talking nearly $3 billion. That is just an incredible increase.
So you're probably asking, how on earth did they pull that off? Well, it wasn't one single thing. It was just this relentless focus on operations. They got newer trucks, which cut down on repair costs, they really focused on their people, and that led to the lowest driver turnover all year. Plus, they used tech to make their routes way more efficient. And it all added up to something pretty historic. For the very first time, their operating expenses actually dropped below 60% of revenue for a whole year. That's a huge milestone.
Okay, so if the main business is so strong, where did that revenue miss even come from? Well, the answer is in two big, and I mean big, projects they've got going on. The first is this massive integration of their new healthcare division. The best way to think about it is like a huge home renovation. You know it's going to be great in the long run, but right now, it's just messy.
And this lays out that whole renovation conflict perfectly. On one side, you've got amazing progress. They're improving service, they're finding ways to cut costs, a ton of good stuff. But on the other side, you've got the mess. They're wrestling with these complicated billing systems, and yeah, they lost some customers during the transition. These are the headwinds that are temporarily dragging down those top-line revenue numbers.
All right, so that's project number one. The second huge project is their bet on sustainability, and it's a massive one. They are pouring a ton of money into automating their recycling plants and building these brand new facilities that actually turn landfill gas into renewable energy. These are definitely long-term plays on a greener future.
And this chart tells the whole story right here. Thanks to all that investment in automation, their recycling business became 22% more profitable. Now get this, they did that even while the market price for recycled stuff fell by almost 20%. That's incredible. It just proves their strategy is working. They're gaining control of their own profitability no matter what the wider market is doing.
So here's the bottom line, the key takeaway from all this. The company's internal strength is real. These big strategic investments are absolutely paying off where it counts, in their operations. But all that good stuff is being kind of hidden or masked by those temporary issues with the healthcare integration and the weak commodity markets.
Okay, so with all this stuff going on, the good and the messy, how is the company showing that they believe in the future? Well, it all comes down to what they plan to do with their money next year.
And this number, well, it pretty much says it all.
After a fantastic year of generating cash, they're now forecasting that their free cash flow is going to grow by another 30%. They're expecting to generate a whopping $3.8 billion.
And what they're planning to do with all that cash is maybe the biggest signal of their confidence. They're planning to give about 90% of it right back to shareholders. We're talking dividends and stock buybacks. That is a huge, huge statement.
And it wasn't just some vague promise. The CEO himself came out and put a number on it. He's talking about one of the biggest capital return plans in the company's entire history. You just don't do that unless you are absolutely convinced that your business is on rock-solid ground.
So their game plan for the next year is super clear. Number 1, keep that core business humming along and growing. Number 2, start cashing in on those big investments in sustainability. And number 3, finish that healthcare renovation and turn it into a real engine for growth.
So, this all brings us right back to where we started. You have the short-term noise that headline earnings miss. And then you have the story of long-term strength being built right under the surface. The question for any investor, for anyone watching this company, is which story do you believe? What does the data really tell you?